Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, December 6th. It's 6:45 as I'm starting the video, and as always, please run your player at 1.25 or even 1.5x to move through the material quickly. Taking a quick look at futures. Bitcoin is the big story this morning, off an astounding 11%, and that's even not even the worst of the worst over the weekend. It's bounced a little bit. Oil's up about 2.75%. Copper up 1%. Nat gas has gotten killed over the last week. It's down about 30%, down 7% overnight in futures. Equities are toggling to the green, but not dramatically so. A little bit above flat. Small caps are up 0.75%. Nothing today on the macro front, pretty quiet. Over on earnings after the bell today, we've got Coupa Software and MongoDB. And actually on the Mongo chart, I was looking at it, there's a big gap below price right now. So I don't know if that's something you want to try and play for earnings, but it's one of those high flyer name type things. So it's got to be on the money as far as earnings go, or that might be targeting that gap fill after hours. So let's get into it. Friday, looking at the 10-year yield chart, we had another big plunge in yields. COVID variant fears, I guess, is the word for it. Way down here at 1.34%, and we were up here at 1.67% just a week or 10 days ago. So it's been a dramatic plunge in rates. TLT, we noted this breakout here with a measured move target of 156. And you can see that prices moved up into the 154s. So well on its way to hitting that measured move target. And if you either bought the reentry into this box, remember, if you go out, then when you come back in, your target's the opposite side. That worked out great. And then we had the breakout with a $5 measured move, well on its way there. So even though it's been choppy, the technicals have worked pretty darn well on TLT. VIX, we had a big look above on Friday up into the 35s. It backed off towards the end of the session, but still above 30. So I mean, when VIX is at this elevated a range, you've almost got to expect 600-700 point moves on the Dow just out of vol alone. So it's going to be a really choppy, volatile environment until some of this stuff sorts out. What do I mean by this stuff? I mean rates. I mean, what is this Omicron variant? What is it really? Is it high transmissibility coupled with mild symptoms, or is it high transmissibility coupled with the Delta variant type intensity? And also we've got the FOMC doing a lot of saber rattling, talking about their taper, potentially accelerated taper. And I think that concoction of all those things is keeping a bid in the VIX over the last week or so, and it may end up staying elevated here for the duration of the week, or possibly even into next week when we have the Fed meeting. So I think a meaningful break below 29 heading down would be a very welcome news. But as long as it stays above 30, I think it's going to be tough to get any real big directional type move out of the indexes. When we go to the oscillators, we took a leg down, as you'd imagine, on Friday. So now, I mean, we remain in oversold territory. We're here at minus 65 on the New York Oscillator. We're here at minus 72 on the Nasdaq Oscillator. And normally I'd say, position for a bounce. And, that still holds. We are oversold. We are due for a bounce. But that doesn't mean, we just rocket higher. It may mean we grind higher. It may mean that we stop going down. But that doesn't necessarily, like I said, doesn't necessarily mean that we instantaneously rocket higher, because as we'll see in the next couple slides, we are below the 50 on the daily. So, I mean, you've got to be really, really defensive when price is below the 50. Here on the weekly, we talked about last week, we talked about 450 holding on SPY. It did that, mission accomplished from that standpoint. But we've got a bearish engulfing weekly candle with a follow-up red candle. So that can be indicative of the beginnings of a trend change. And so this week, we really got to have 450 hold the line for the duration of this week. Put in a green candle would go a long way to stemming the bleeding. But you lose 450, then you can see on the chart that our next real area of support comes in at the 40-week moving average down around 430. And you can see that here on the daily chart, where we made that low on Wednesday of 450. Thursday was a bounce day. Friday, we came back to retest that 450 in a big way. Came right down. We do have an uptrend line helping as far as support goes. So for me, in the next few days, really, I mean, going forward, 450 has to hold, or else when you lose the uptrend line and you lose lateral support, then you're coming down here, I would think, relatively quickly down towards 435. And you can see we've got the 200 exponential moving average coming in right around 426. And that would be to test these prior lows back in time. Now, when we zoom down to the lower time frames for you active traders, I think any kind of a move back towards 450, here we are, trading 453, let's call it. If you got to move back to 450, I think you can buy it there, just because the prior low has held here. You've had 4 or 5 candles hold at 450. And as we always say, support is support until broken. So if we made a move to come back to 450, I think you buy it there with a tight stop, because, I mean, let's face it, you break below, then you're starting to look for the downside, and you'd have to, conclude that if we lost 450, we'd probably come down here and close this gap down to 447. But then below that, there's not a lot stopping it from going lower. Here on the 30-minute chart, I just want to include this not only for the granularity for you active traders, but to show this move on Friday that I thought was interesting. I always like to look at these technicals to see, what I can learn to, add to that storehouse of knowledge on price action. We had that move. You can see this needle bar come right up to the top of the old gap that was there, muscle memory there, if you will. and then it reversed right away. And whether you got short here, that might have been a really tough trade, but you definitely had a location here when price dropped below this 456. That would have been definitely a place to get short, and then you made that quick run back to 450. So today, I think your active pivot is right here at 453.5. If we break above that, I think we can come up to 456, and then there'll be some resistance there, and then you've got this downtrend line coming in about, say, 458. That will be your next level of resistance for you active traders. Moving on to the Qs, very much the same kind of a setup as we had on SPY. We had the bearish engulfing weekly candle 2 weeks ago, and then last week we had a follow-up red bar. I think this week we should be keying off of 380. Here we've got it here where we took a look below and then closed back above, and you can see that the 50 EMA comes in. It's the green one, comes in at 384. I mean, we can go down to 380. That was the prior low. That was the prior breakout area. You got to hold that. You got to hold the prior breakout, or else this thing starts rolling downhill in a big way. I think your first major line of support here with this large volume over price candle comes in around 372.5, and should you lose that, then you're going to be down here at 355, where the 200 EMA comes in and these prior lows. So, I mean, if you're an active trader, or if you still have quite a bit of long exposure, you see a break below 380, you either got to hedge that out by getting some puts in the Qs, or you've got to back off of your long book at that point, because below 380, I think we're going to be heading lower, and potentially much lower, down towards 355. Here on the shorter time frames, you can see in this gold EMA where the 50 on the daily comes in right around 384. I think that's the first big hurdle. I think you got to be cautious about getting long the Qs below the 50. I would like to see that taken out, and then you can be long against the 50, and then look for moves up towards 387, and then 390, and then 394. If it can break out of this declining channel, that would be a very strong and positive move for price action. And on Friday, we talked about this classic bear flag action that broke down. Now we had some consolidation down here at the lows around 380, and we had a strong final bar into the close that brought price back up to just below the 50. So I think today, although I've actually got this pivot at 382, I'd like to see this 384 get taken out. That's where the 50 is, and I think that's the place where you get long against the 50 if price can prove it. If it can't, you're probably just going to come down here and then retest 380 again, where we were on Friday. So I think 384 is the place where I would be looking to try along. Now, we've been talking about IWM. It's really been the weakest of the bunch. Why? Well, it's already lost its 200. It did hold 312 on Friday, which I guess is a small victory. But I think that all things considered, I think it's going to come and make a tag of the bottom of the box where you see way back in time, we've had all these touches of 210, and I would find this to be an odd place for price to all of a sudden just rocket higher. Now, we may go up to touch the 200 before reversing, but I think we're going to come down here before it's all said and done and make a tag of that 210. And if we were to do that, then that's a place where I would definitely try along, because I mean, there should be a lot of buyers at 210, and if there aren't, then that would mark a big top in the market. Going back here to the daily chart, if you go back and look at this consolidation, it's almost, well, it's all of 2021. It's basically a year long in this trading range. And if you lose 210, then number one, you've got a $23 measured move to the downside, which puts it at 190. And then that would look like a year-long consolidation top on the charts. So here it is on the 30-minute chart. You can see this little move off of 213 into the close. I mean, if you wanted to stay long against 213, that's fine. Your first level of resistance is 217. Then you got 218 here where the downtrend comes into play. Moving on to FATMAAN. Facebook has broken down. It's below all the moving averages, below the 200 here that comes in at 325. Really, this thing has got to hold the line at 300. If it doesn't, I see 285 coming in very quickly. You can see a void in the chart, and then you've got a big consolidation range between 285 and 245. That would be the next area of support. Now, last week I talked about there was an unfilled gap back in the chart. I was mistaken on that. There is a gap, but it's not till way down here in the mid 200s. We got a lot of work to go before we were to get down to that level. So the gap I was thinking of got filled back in here. So there is no gap. There just is a void in the chart below 300, which would take it down to 285 should that break. Now, Apple is managing to stay alive, as it were. It has not broken down. I think today 162 is your active pivot. If it can break above that, then you can look towards 163.5 and 165. Below that, you see we've got essentially a $2 gap between 159 and 157. We made a run at it back here, but did not fill all the way. So it got a bounce off that first touch. I think if it came down to 159 again, I think it would go ahead and fill that down to 157 and test this prior low. Tesla rolled down out of the top, had a flat bear flag, broke down, another flat bear flag. I think today you key off a 1010, this 1010 level, which is a level of support. You break that, I think you're coming to 980 real quick. Doesn't look like a lot, but that's $30. And then that will check this prior low and be a place for bulls to make a stand. If that were to fail at 980, then I think you're going to roll down here to this gap at 950, where I think on that first touch you would get a bounce, but then ultimately probably fill all the way down to 910. So this is a place where, if not here at 1010, got to make a stand at 980. And while I'm on the topic, I put all of the weekly charts of the ARK funds on the blog site this morning. I'm not going to go through them today on the live charts, but if you weren't a Tesla guy, if the options are too expensive, or for some reason you don't like the volatility in that, a good proxy is going to be your ARK Invest, your ARKK fund in the ARK funds. That would be a decent proxy for Tesla, because that particular fund holds about 10% in Tesla. So if Tesla is breaking down, you're going to see that in the ARK Invest fund as well. Switching back to the daily on Microsoft, we said on last week, if we saw a break in 330, you're going to go down to the 50 almost immediately. We got that. We got an undercut down towards 317. Ultimately, the 50 held. So I think now your pivot is the 50. You can be long against the 50 and look for a bounce, or if you lose the 50, I think you're going to come down here to this gap and probably ultimately go back to test this breakout at 305. Now, what I want to remind you of is that classic move. Remember, we always talk about the breakout and back test. Well, that also works in reverse, because now we've got a breakdown. And what you could see, since we're kind of oversold on the whole scope of things, you get a rally in Microsoft that comes back up here to back test 330. Watch, if you see that move, Microsoft come back to back test 330 and get weak or be unable to break back through again, then that's your second bite at the apple. That's your second opportunity to get short Microsoft, because then you'd have a breakdown, back test, and then fail. So that's how that this one could potentially play out. Amazon, in a pretty pronounced downtrend here. We found support on Friday at 33.40. Got a good bounce into the close up towards 33.80. I think you can use that as your pivot here this morning. Above 33.80, I think you can look towards 34.30 on the upside as a first resistance. If your 33.80 were to fail, you're probably going to come back here to 33.40 right off the bat to back test the Friday low. And then, of course, if you break a prior low, that's always a sell signal. If you were to break 33.40 on the downside, then come back here to 3,300. And really, from a technical standpoint, you've got prior lows back here at 3,300 that have yet to be tested. So whether we, bounce here first and then roll over, or have weakness here this morning and roll over, I think price is going to come back here to 3,300 and test these prior lows, and then that would be a big place in the chart for the bulls to make a stand. Google on the daily, kind of trapped here between 2,900 and 2,800 with the 50 here at 2864, more or less right in the middle. But we've got price below the 8, the 20, and the 50. So from that standpoint, you've got to be technically defensive and even bearish below the 50. I don't like trying to go long below the 50. I like that to be a level that if it recovers, then you can say, okay, I can be long against the 50. For example, if that were to break above 2964, you can say, okay, you can use that line at the 50 as your pivot point. But just down here, kind of in no man's land, I don't think you can do much with it there. Now, if it came back again to touch 2,800, notice that you had two prior touches there that held. I think that is a much more compelling long idea, where you could be long against 2,800 where support is held, and then even just look for a bounce back up to the 50. But as far as some kind of big swing position, I would wait until price is back above the 50 EMA. Which brings us to Netflix. Very, very weak. We saw this steep rising wedge, then it break below, and then once it lost the 50 right here at 640, it really accelerated to the downside, and it has lost another $40 since then. We had that bad selling day on Wednesday. Thursday, when the rest of the market was bouncing, Netflix and a lot of the other FATMAAN names really didn't do anything. They just hesitated with a doji, and then Friday, with more selling, pushed this down towards 600. So there is a little support here at 600, but if you see some bear flag action here at 600, if the market starts to recover a little bit, have some positive price action elsewhere, and you see a little bear flag form either on the daily chart or on the 60-minute chart, and then you get a break below 600, then I think you're going to come down to the 200 pretty quickly. Down towards 573 is where the 200 comes in, and actually probably come back to 560 at the top of this big $90 trading range that goes back into the chart almost a year. And then that would be a really, really big spot for the bulls to hold at 560, because by now you do not want to go back in to a big trading range after you broke out. So, but, just recapping this, when we got the breakout of that $90 range, of course, then $90 is your measured move target, and we got that and more. We went from 560 to 700, so that's $140. It exceeded the measured move target. So from that standpoint, mission accomplished. And now we may be coming back to back test that. But as far as the technicals go, they worked like a charm on the breakout of this trading range. We got a nice impulsive move higher, and now they're coming back to, looks like they're going to back test that breakout. Semis have remained pretty strong in all this turbulence. We said on Friday that we had to have 299 hold. We had a little bit of a look below. It did hold, bounced up here to the 301 range. I think as far as the semis go, as long as 299 holds, it's not a problem. Come up here to 302. That would be your first layer of overhead resistance. And then, your 305 and your 307 area up here for overhead resistance as well. If we were to lose 299, then I think we roll over and head for this gap here at 295. Probably get a bounce off of that on first touch, and then see if we have a kickback to 299, or if we just go down and fill that gap down to 292. So, like I said, on the blog site, I've got all the ARK funds on the weekly. I think if you look at that, some real technical damage has been done. Don't think that those names can't go lower, because they certainly can. The big run-up in 2020 has left the stocks from a technical standpoint very vulnerable, because there's not a lot of technical support underneath the stocks. So I've got all the key levels marked. I really encourage you to go there and take a look at ARK. And the nice thing about the ARK funds is, by definition, each of those funds, whether it's fintech or genomics or invest or web, they are invested in the high flyers, the real high valuation names. So from a convenience standpoint, they exactly have the things that are going to be most vulnerable in a tightening liquidity environment. And so that makes them, good short candidates. Of course, you can go and find the Zooms and the DocuSigns and all the individual names if you want to do that. But generally speaking, by definition, those names are the names that are most vulnerable now, even though they have sold off a lot. And what you can do is you can go to any of these ETF websites and look for the top 10 holdings of each of those funds. And if you're a guy that likes to get individual names, then you're welcome to do so. But what I can tell you is, on a lot of those names, they don't have very compelling option chains, because the spreads are really wide. They're not very liquid names. So then you're back to leaning more towards doing something with the ETFs, because they are liquid, they are more heavily traded, and you can get better option fills on the ARK Invest family of funds than you can some of these lower cap, more illiquid names. So I'll just leave that with you. So let's see how the week rolls out after a big week of selling. Let's see if we can stabilize a little bit here and maybe make a stand at this level. If not, of course, we have to look to the downside. Be cautious out there with the VIX over 30. If you're new here, I hope you like the analysis. Please hit the subscribe button, the alarm bell, hit the thumbs up. That would be great. Look over in the show notes. You'll find a link to the blog site where you can register for all my content with a simple dropping in of your email address. Then you'll get everything I produce sent right to your email box. You won't have to hunt around for it or wonder if I've published anything. For the rest of you, longtime subscribers and viewers, thank you so much for the support. Please pass the link along to others in your trading circle and to those that may benefit from the work. I really appreciate that. So this has been Chris Buss with Trader's Profit Compass. Talk to you next time.